Hello friends, I'm your host Rakesh, and in this video we are going to talk about the head and shoulder pattern. Now you might be thinking that what is this pattern, friends? As the name suggests, a head and shoulder pattern is a pattern in which we have a head and two shoulders left and right. It is an amazing pattern. You should trade this, and today I'm going to show you how to do this, how to identify this pattern, what are the essential requirements for this pattern to confirm. So let's start this video.
But before we begin, let us have a look at the risk disclaimer.
It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. Okay friends, first we will do a small recap of what we have learned till now in the previous videos. First of all, in the first video we had seen what is a double top, how to identify it. Then we had discussed some do's and don'ts of the pattern double top. Then we discussed a few examples about the double top pattern. Then we discussed about double bottom pattern, what is it and how it looks like. Then we have discussed in the next video do's and don'ts of the double bottom, how to trade this, and also we have seen a few examples of the double bottom in the last video. In this video I am going to talk to you about the head and shoulder pattern. Friends, as the name suggests, head and shoulder means this pattern will have head and shoulders. So let's talk about the head and shoulder pattern. What we need to identify this pattern. Okay, first I will show you a step by step. There is a need of prior trend, so I will draw it here. What you need to have is there is need of a prior trend. Okay, now if I say uptrend, it means higher high, higher low. Okay, so this is a trend, friends. Okay, there is a trend. Now we have seen this is a trend. Okay, there is a trend, established trend, so we will write it as established trend. Okay, then what we need, then we need a left shoulder. Now how this left shoulder is formed? The left shoulder is formed when there is significant correction from the peak in a trend. Now this is a trend. Now say this is a peak. Okay, I'll write this as a peak 1. So this is a peak when there is considerable correction from a peak. Okay, then that peak is called shoulder. So we will now rename it as a shoulder left. Fair enough. Then after, what we need a left shoulder. Now a left shoulder we have agreed to what it is. Then we need a high head. There is a need of a head. Okay, now how the head can form? The head can form only and only when the price goes higher than this shoulder, because head is higher than the shoulder. So I will explain you how. This is what is going to happen next. Okay, now this will be read as head. Fair enough. Now we have got a head also here, and then after we need a right shoulder. To get the right shoulder, it is a tricky thing, because to get the right shoulder, first we need to come back to almost the same depth as the market had, from where it went to make the head. And after coming here, it again need to go high to give us the right shoulder. Okay, now in textbook I will say that both of these shoulders should be of approximate same value. Okay, these should be of the same height, but in the real market they tend to be higher and lower, and these lines in textbook should be at the same levels. These levels should be same. Okay. But when I will show you some examples of the real market, then you will learn that these are very different from this. They are not necessarily making a horizontal line like this one is making. Okay, sometimes they tend to make a sloping line upwards, sometimes they tend to make a sloping line downwards. So now we have got a shoulder, a head, and we also need a shoulder right. So we got a shoulder left, a head, a shoulder right. Now this line, now if this is the first low, I will mark it. So this is the low one, and this is low 2. Then I must tell you that the low 1 is formed after the correction from the left shoulder is over, and low 2 is formed when the correction from the head is over. You have to join these two lows. Okay, these two lows may be higher and lower, or they may be at the same level. If they are at the same level, then it will be a horizontal line. Otherwise, you can simply draw a line by joining these two. Okay, or for this case you can draw a ray like this, joining these two, and extend it on the right side, and now this will be termed as a neckline. Okay, now this line here will be termed as a neckline. Alright, now this pattern is now complete. Okay friends, this line is the neckline. So we need an established trend first, then we need a left shoulder, then we need a low, first low, then we need a head, then we need a second low, then we need a right shoulder, then we need a break of the neckline which was formed by joining these two lows. Now this low needs to be broken. This needs to be broken, and we need a confirmation at the retest. Now what I have said, I will explain it. You see, there is a need of right shoulder. Okay, we got the right shoulder. Then after, there is a need of a neckline, which we got after joining these two lows. And then after, there is a need of a break of the neckline, which is confirmed by the candle closing below the neckline. Okay, and then retest of support turn resistance is also required. After that, we will project the price target. Now if there is a retest of this neckline which was broken, now this was previously acting as a support, see here and here, now this should act as a resistance. If it does, then we open a position in the sell, and if it does not, then we don't open a position. And essentially it tests it and it gets rejected very badly here, and most of the times it gets rejected, and if not, sometimes it even goes to the target from this place only, and it never retraces back to the neckline. Okay, only very few times, like 1 or 2 in 10. So you always, most of the time, you get the chance to sell here. Now if you wait for selling here, you get a very good risk to reward ratio, and I always recommend a good risk to reward ratio. Now, price target projection. How will you project the price targets, friend? It is very easy. From the place of the break of the neckline, you mark how many points are there till the head. Till head there are 355 points, and to the downside, so we will have 355 points. It is very simple. It is very simple. 355 points here, sorry, here at the break, and so from here we will measure 355 points, so that will be our target. So this will be our target. Fair enough. 355 points. This is 1.5927. So it is as simple as it is. So this is I will do a quick recap of the entire video. This is the head and shoulder pattern. This pattern is found mostly at the end of a bull market. Okay, if there is an uptrend, when that uptrend is about to end, then you will see this pattern forming. If you find this pattern forming somewhere in between, it is not a good pattern. It will form only when there is an established prior trend. If there is a bull market which is running, you can expect at the resistance some head and shoulder pattern forming. Okay, now this most of the time the left shoulder and the right shoulder are approximately of equal length, but in the real market nothing is ideal. So sometimes you will get this shoulder below this one, and sometimes you will get this shoulder below the right shoulder. So you have to imagine, and I will try to give some examples. I will also come up with a do's and don'ts video about the head and shoulder, and I will also give some live market examples so that you can see yourself what we have to look for and how to trade this remarkable pattern in a very profitable manner. This is an amazing pattern that you should be trading to make some green pips. Okay, now you have to remember that this pattern occurs only in an uptrend. Okay, and it marks a major trend reversal. When the trend is complete, you cannot expect head and shoulder forming every here and there. Okay, sometimes left and right shoulders are symmetrical, but they need not necessarily be symmetrical. They can be of different heights, different weights, so you have to be certain about it. And also to note that the low 1 and low 2 are also not of same level. Most of the time they are higher and lower than each other, so this line tend to make like this sometimes like this. But yes, one thing that I want to tell you is that if this slope is getting lower like this, then a break is considered a very strong break. But if the slope is like this, then this type of break is not considered very bearish in nature. Okay, so you have to keep this thing in mind. If the slope is like this and it breaks the neckline, okay, then it is a go situation for you. So that's all I wanted to tell about the head and shoulder pattern. We'll see you in the next video, where I will tell you what to do and what not to do with this pattern while trading. Thank you very much for watching this video.